and welcome to the latest section of my home buying journey. So if you've been following me already, you know that I am in the process of buying a property, and I spoke to my mortgage advisor the other day and she said that I need to start looking at insurance. And so I thought, what a perfect opportunity to speak to Harvey, who is the Money to the Masses insurance expert, and ask her what type of insurance that I need to look at as a first-time home buyer. So Harvey, do you know, I spoke to my mortgage advisor the other day and she said that I need to get quotes for buildings and contents insurance and life insurance. So do I need these types of insurance? Are they essential for someone buying a house for the first time?
Yeah, insurance is very important. You know, it's a large part of buying a property. Your buildings insurance is one that you won't be able to exchange contracts and, get going without. So your lender will need you to have that in place. So that's definite. And most buildings insurance come with contents insurance. I'm sure you've seen that already. So yeah. It's a good idea to sort of start looking at those insurances and looking at your personal insurances as well.
Yeah, so I had a few quotes through for buildings and contents insurance the other day, and I understand the contents insurance insures the things inside my property. Is that something that is essential that I must have? Because I know I have insurance for my personal phone separately anyway. So is this something that I need to have with my buildings insurance?
Yeah, contents insurance isn't something that's mandatory, but, from a personal point of view, you want to have a look at it and just work out whether or not you need it. It's really common for people who are either living with parents or are renting their property to have insurances for specific things. So you might have mobile phone insurance, you might have laptop insurance, you might have insurance for those things that are really of value to you and would cost a lot of money to replace. But you might want to look at contents insurance for your home that might expand what is insured. And if you can insure those other items within your contents insurance, you might want to review the insurances that you have because there may be a little bit of overlap there.
So the buildings and contents insurance, what does it actually cover you for? Is that the type of thing that's protecting me if our house was burgled or there was a fire, for example? Or is that different? Is that something in home insurance, or are they the same thing?
Yeah, it's confusing, isn't it? Because you have so many different names for essentially similar products, So buildings insurance essentially is your building. Everything people used to say to me, if you took your house and you turned it upside down, everything that didn't fall out of it, is your building. So everything that's structurally part of your home is your buildings insurance. Your lenders want you to have that in place so that if there is any structural problem or flooding or any sort of land subsidence or anything like that that might cause problems to the structure of your home, then that's ensured that you have sufficient insurance in place that would pay for the repair or the replacement of things that go wrong. Contents insurance, on the other hand, is everything that does fall out. So you turn your house upside down, everything that falls out is your contents. So contents can be things that live in your home predominantly, but also things that travel with you. Things like your iPhone, your phones, I shouldn't say iPhone,
We're trusted iPhone users over here.
We are trusted iPhone users, yeah. So your phones, your laptops, anything that you travel with, those things might be things that are still in your contents insurance, but contents insurance sometimes allows you to insure things away from home as well, so that they're still insured if you're on the train with them or you're at work in your office with them, so that you can extend your insurance in those ways. But again, look at the insurances that you already have. Is there overlap there? Is there a need for you to insure contents beyond the contents that you already have insured? And sometimes it's just about tidying things up and making them more cost effective for yourself and your partner.
No, that's great, thank you. I know there are other insurance policies that we should be looking at as like first-time home buyers. Like I said, my mortgage advisor gave us quotes for life insurance. But we've had a discussion before, and I've mentioned it to you before, about trying to protect our income if we're in a property. And as far as I'm aware, life insurance only covers us for death. Is that right?
Yeah, I mean, life insurance is kind of an overarching term that people use to describe all kinds of insurance. But life insurance specifically, it pays out if you die, which is the least likely thing to happen to you. God forbid, yeah, I'm hoping you both, live a really long, fruitful life. And, it's one of those things that can seem like the worst thing to happen, but it's also the least likely thing to happen to you during your working life. So, there's an element of, yes, I want to ensure that because it's the worst thing that could possibly happen. But there are things that are more likely to happen statistically that we need to look at first, like illness, for example.
Yeah, and I mentioned to you previously before, it's funny that you say that actually, because my partner, a few years ago, he actually broke his leg playing football at the weekend. Completely fluke accident. He's the only person I know that manages to break his leg with no one else around him and just running. But that saw him out of work for 3 months, and he wasn't actually covered by sick pay with his employer.
Yeah.
So luckily at the time we've both been living with our parents, so we were fortunate enough to not have any major bills to have to cover. But if that had happened with us owning a property and paying a mortgage, I think it would have been a completely different story.
Mm-hmm. Yeah, definitely. I mean, the thing is, you're unfortunate and you're fortunate. Unfortunate that happened to your partner. Fortunate that actually that experience means that you're much more tuned into the possibility of that happening now and the impact that would happen on you and your partner financially. So we all think we're invincible. It's never going to happen to us. We think we're never going to get ill. That accident won't happen to us. But these things happen. It's life, and accidents happen. Illness, unfortunately, happens, and what is important is that you've put in place some measures of insurance that will allow you to focus on getting better rather than worrying about paying for your mortgage payment, paying for your other bills, and all the other financial responsibilities that you'll have as a homeowner.
Yeah, so if we wanted that form of protection when moving into our property, what types of insurances are available that cover us should something like that happen again?
Yeah, I mean, the first and foremost thing to do is to check what your employer does for you. So within your contracts, within your employment contracts, there will be some indication of whether your employer pays you whilst you're off sick. So if you're unable to work, how much would you be paid? How long would you be paid for? And then, also look at things like your savings. Do you have enough money to get you through a difficult period of time? You'll be really sensitive to the fact that you're probably taken a lot of your savings and plowed them into the house now, which is what most people do when they buy a property. A large part of their savings will disappear as the deposit for their home. And that might leave you feeling slightly more vulnerable until you're able to, build that back up again, for example. So have a look at what you already have. Insurance should be what plugs the gaps, So if you see some gaps, if you see that perhaps your employer only pays you for a certain amount of time and beyond that you would struggle, that's where insurance comes in. And what you're probably looking at there is a type of sickness policy called income protection. I prefer to call it sick pay insurance because that's essentially what it is. It pays you a sick pay. So if your doctor signs you off and you can't work, then it's going to pay you an income until you're able to go back to work.
That's great. That's really helpful. Thank you. But in a few of the quotes that I got from the mortgage advisor, I noticed that it included critical illness in the cover. What is critical illness cover, and is that something that we should be looking at as well?
Yeah, I mean, critical illness insurance has its place as well. Critical illness insurance is quite specific. So when you look at critical illness insurance, you'll receive a document. It will have a list of illnesses. The most claimed for illnesses are things like cancers, heart attacks, strokes. these kinds of illnesses cause the largest amount of claims with critical illness insurance policies. You can imagine if one of those events happens, that's quite a devastating thing to happen, and it might require a longer period of recovery, which is why some people look at critical illness insurance and think, well, if I had a lump sum of money and I could reduce down the mortgage or pay it off entirely, depending on how much you can afford to buy in terms of insurance, then that can give you financial ease at a time when it's probably going to be quite difficult.
Okay, so what type of sickness insurance do you think is the most important?
Essentially, you want to start with the most likely thing to happen. The most likely thing to happen is that we either injure ourselves or we become ill and we can't work. So that's the most likely thing to happen. Statistically, when you look at it, sick pay insurance policies, or otherwise known as income protection policies, are the ones that see the most claims. Now, that in itself is quite telling, isn't it? It helps you to understand, well, this is the one I'm more likely to need. That can be a really useful tool, because also within an income protection policy or a sick pay insurance policy, you don't have definitions like you do within a critical illness insurance policy. So anything that means that your doctor has signed you off from being able to work, and that could be physical, but it could also be mental. So, the largest claims in that particular field come from things like stress, depression, and musculoskeletal problems, so back problems, things that can be quite chronic and can require long periods of time off work, but actually don't fall into the category of things that come under a critical illness insurance policy. So a critical illness insurance policy is for things that are quite specific, like cancers, heart attacks, strokes. And within that policy, you do have a finite list of illnesses that you're covered for. And within each illness, there'll also be a definition. So cancer can't just be any cancer. It will be a specific staging definition of cancer that will warrant a claim in that area. Whereas sick pay insurance can be a little bit more all-encompassing, just because it doesn't have those definitions that you have to meet. But the difference is, one pays you a lump sum, so the critical illness insurance generally pays you a lump sum. The sick pay insurance keeps on paying you an income. And those are things to consider. Do we just need to have an ongoing income, or could we do with a little bit of a lump sum as well? If it was something more serious, would that give us access to things like having a private medical treatment, or having access to adaptations to allow for our illness? So those kinds of things are really, really important. But I generally start with the sick pay insurance.
Yeah, see, this is really interesting, but it's also, I imagine, for other people watching as well, it's quite daunting thinking about things like that. My partner especially, I know he hates talking about anything to do with death or getting ill. He likes to think that everything is fine and dandy and you're going to live forever. But surely there's some benefits to thinking about these things now and looking at them while we are young. I mean, we're in our mid to late 20s, so we don't have any other responsibilities as of yet, and this will be our first home purchase. We don't have any children and we're not yet married, so surely there are some benefits of us looking into it now. Maybe it will be cheaper than if we look at it later down the line.
Of course. I mean, the conversation is a really healthy one to have, and you'll both come from different places. I find males and females think about these things differently as well, so sometimes there's that advantage to having an open conversation about, right, if this happens, what would that look like for us, and how would we cope? Your situation is unique to you, and it is important that you have some understanding of what that means to you, and what things concern you and what things perhaps don't concern you. But the guidance is generally that you look at things from the viewpoint that if it happens, if it has a financial impact, that you're going to be able to meet your financial commitments in terms of your mortgage payment, your essential bills, putting food on the table. All of these things are really, really important things going forward that you'll be able to manage yourselves. And you have the advantage of being healthy, of being young. So the premiums are the cheapest they ever will be for yourself and your partner. So there's that added advantage of if you consider certain things and you put insurance in place, you're fixing the cost for a long time. So one of the things that's actually quite important to understand about things like critical illness insurance, life insurance, things like income protection, which is your sick pay insurance, is that they're not like other insurances where you renew them every year. So you're not going to go back to market and start hunting around for the best premium every single year. You might have to review them because your life changes and you have different needs. But those costs can be fixed for the entire duration of your mortgage. So there's a real advantage to that as well.
Yeah, no, that's great. That's really helpful. Thank you. So if someone was watching this now in a similar situation to me, like no children and marriage, I mean, previously I had always assumed that life insurance was something for family, someone if you were a parent and you had family to look after should the worst happen. But that's not always the case, is it? I'm assuming that, well, my mortgage advisor has recommended that we take out a life insurance policy. So that is something that we should still be looking at, even though we don't have those responsibilities.
Yeah, definitely. I mean, it's about creating building blocks of insurance as well for the future. I mean, even now, when you sit down with your partner and you talk about, well, if death happens, will you continue to live in the property? Will you still want to keep on the mortgage? Will you be able to afford to keep on the mortgage? These are the kinds of questions you'll ask of each other, and that will reveal whether or not you need these insurances. But like I said, it is cheapest for you to take them out when you're young and healthy. So sometimes having one eye on what your situation is now and also an eye on what your situation might look like in the future and what you might need can help you to make those decisions and navigate these choices that are put in front of you. But remember, life insurance doesn't necessarily add to the cost of your insurance if you're already taking out critical illness insurance. Critical illness insurance costs about the same even when you include life insurance. So if you take out life insurance, it's not going to drop your monthly cost too much. So if you're already considering something like critical illness insurance, do take life insurance with it, because it will probably cost you the same, or ask your mortgage advisor to provide you with quotes with and without. I always like to see everything. So, get some quotations that show you a little bit of critical illness insurance, more critical illness insurance, and see what that does to the cost so that you have some choices that you can discuss with your partner and sort of find the solution that best suits you.
Oh, that's great. Thank you. So after this, I mean, I've already learned so much about insurance and have a rough idea of what types of insurance that we may want for when we move out. But if I went away now and those watching it went away, where is the best place to go? Like, where do you buy these types of insurances? How do you buy these insurances?
Well, you can buy your insurances through your mortgage broker. So your mortgage broker will have provided you with quotations based on what he or she thinks is suited to you. What you'll find is that your mortgage broker will normally focus on the mortgage, and my experience is that sometimes mortgage advisors can fail to recognize that you have a life that is wider than just the purchase of your home. So asking you questions like, do you plan to have children in the future? Are you planning to start a family? These kinds of questions can be quite useful in terms of forward planning a little bit with your insurance as well. But start with your mortgage broker, see what they offer you. Some mortgage brokers will have access to all insurance companies in the market. Some will be tied. So look out for that. Your mortgage advisor may be tied to just one insurance company, which means that they only have one price to offer you. But your mortgage advisor may also be tied to a handful of companies, which means they have a panel of insurance companies that they choose from. That obviously widens the scope of premiums that they can search for you. But the best option is really to be dealing with somebody who has access to the whole market. So they're basically going out and finding you the best premium or the best insurance policy. Because remember, not every insurance company is going to offer you the same level of cover. in terms of things like critical illness insurance and income protection, because those insurances do vary from one insurance company to another. So that's where I would start. If you feel that you're not comfortable with your mortgage broker because they're either tied to one insurance company and you want to have a wider view, then take a look at the website and look at some of the articles and start navigating the choices that you need to make. And then there are some suggestions for where you can get further help within the articles as well.
That's great, thank you, Harvey. And just before we start to wrap up, just one more thing. With life insurance, in a couple of the quotes, I noticed that they were quoting for just covering the mortgage, what seemed like. So I think the term was decreasing term life insurance. I know there are a few different types, of obviously not entirely sure what the different ones are, but are you able to just quickly explain the differences between the two and what may be the benefits of each one?
Yes. Decreasing term insurance, or sometimes called mortgage protection insurance, is a reducing one. So if your mortgage is on a repayment basis, so you're paying the capital and the interest, so you're paying your mortgage off as you go along, you will sometimes be offered a reducing type of policy. It basically just means that the value of the insurance is reducing the same way the balance of your mortgage is. So at any given point, you've got enough money within the insurance to pay off the mortgage. So that's essentially what it does. What it does for you from a cost point of view is that policy is sometimes cheaper than taking out a policy that maintains its value. So again, I'm a curious person. I like to see the cost of both, because the advantages of having a level policy is that it maintains its value. Now, this might not be the last property that you buy. It probably wouldn't be, and you may size up. You may start a family, you might buy a bigger house, you might need a bigger mortgage. At that point, do you want to have to review your insurance and replace it? Because you've now got this advantage of having it at your age, your health, and it's quite, reasonably priced. When you get to a point where you're perhaps taking out a larger mortgage, at that point, you might just want to be able to keep this policy and build upon it, which you would be able to do more easily with a level policy. So always ask for the cost of both, and then you can work out whether, the cost saving is enough for you to go for the reducing one, or whether your budget allows you to choose a level one and have that little bit of ability for forward planning.
So just before we go then, Harvey, would you be able to share 3 key takeaways for me and someone in my situation that is just looking to buy an insurance product for the first time and is potentially also purchasing a property?
Yeah, firstly, start with the conversation between yourself and your partner. Having a conversation away from your mortgage broker, away from any advisors, can be slightly less stressful, and there's probably a level of honesty that you'll have with one another with regards thinking about, well, if death happens, what happens? If serious illness happens, what would that look like for us, and what would we want in those circumstances? And make some notes and use those notes when you do go and speak to your advisor. If you're not comfortable dealing with your mortgage advisor for your insurance purposes, remember you're not normally obliged to take insurance with your mortgage broker. You can go out and seek the assistance of a life insurance expert. There are plenty of companies that do this specific kind of advice that will give you perhaps access to more tailored solutions for you. But my last point would be affordability. Always choose insurances that are easily affordable, that you can maintain. There's no point in taking out lots of insurance that then becomes unaffordable to you and you can't maintain and you have to cancel and replace in time to come. So remember, you can always review, build upon insurance. So start with what's easily affordable but still meaningful to you, and then build on that as time goes on.
That's brilliant. That's really helpful. Thank you, Harvey. So if you do have any questions for Harvey about anything to do with personal insurance, then you can email her, harvey@moneytothemasses.com, but also be sure to check out all of her amazing personal insurance articles over on the moneytothemasses.com website, and make sure that you tune in for the next update of my house buying journey.